That superpower of detachment, take a step back, get your emotions in check, make some informed decisions around what's next. Like you've done, Shane, learn and grow from it. Yeah.
That's our kind of whole philosophy and motto is, we don't know what we don't know, and helping clients around that is really rewarding.
People ask us always, like, who are your best clients? And they'll think you're going to say, the people who make $2 million a year. And I always say it's the people with the attitude, or the people who know what they do know and what they don't know, because they're the ones who actually listen.
We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners and Burke Britton Financial Partners.
All right, hello and welcome to another episode of The Finances. Unfortunately, you're hearing my voice again. Jay's off on holiday this time. He had his working holiday to the US, but he's left me, Ben Kemp, in charge again. But fortunately, I've brought Delta in, one of our other senior advisors, so welcome, Delta. The other thing that we've got in our favour today is that we've got an experienced podcaster on, so we wouldn't have to talk too much today, hopefully. We've got Shane Fordham, Senior Investment Property Advisor at Logic Partners. I've checked that title already, so we're on the money. Shane also runs his own podcast, Mind Over Market, which Jay has been a guest on previously. So some people may have seen that in the socials. We thought it was time to get him in, even though Jay's not here today, and hear a lot more about what he does. So thank you, Shane, for coming in.
Thanks for having me. No troubles at all.
And I think, as we were talking about before we jumped on, you need to do a bit of property talk because you've been talking to everyone else about what they do and not about property.
Yeah, it's funny. I looking back on my socials with bringing people onto my podcast, and the focus is so heavily on the guest, and I realised, gee, hang on, there's not much property stuff on my platform. So we've actually got a session booked in next week with our CEO and founder of the business, which will be great to sort of get into some logic and property stuff. But you mentioned Jay come on my podcast. He was actually my very first guest, so so that was nice.
Couldn't tell when I listened. I thought you'd been doing it for years.
Oh right, no, you did. He said experience before. I think we've got maybe half a dozen episodes under the belt now, so I don't know if that classifies as experienced, but no, it's been good fun.
Awesome. Just a few headlines for today. So the main things we want to talk about, and some sort of passion points for Shane's around compliance in his industry, which is quite unregulated. In his role, a little bit of the process around actually purchasing and what you would go through with a client as an example. And obviously then you've got your sort of more of a outside of work passion around the mental health side of things and some donations. So we want to talk about those things, but I think importantly we want to know a bit more about you first. So,
sure.
So I suppose tell us a bit about where you grew up and through school and how you got to the point where you're in this role today.
Fantastic. So I grew up in Bacchus Marsh, and at a fairly young age, probably about 7 years old, we moved down to Melbourne when the folks split up. So Mum took us down to Melbourne, and I grew up all through my schooling through Braybrook and Sunshine in the western suburbs there, which was a bit of well, probably still is a little bit rough, but it was pretty rough and tumble back then. I don't know how I survived that, because I'm very far from rough and tumble, but I somehow got through. I'm still surprised I didn't get bullied more, given I played lawn bowls all the way through school as well. So, got through unscathed there. But from there, I mentioned the bowls. I was actually heavily focused on bowls, and essentially was sort of almost professional, if you want to call it that, as much as we sort of could be 25 years ago. I started when I was 11 and retired at the ripe old age of 25. We've played for Victoria and then the Australian under-25s, and then pulled the pin at 25 and thought I might go in and see what the real world's actually like.
There's money in bowls now, isn't there? Have you missed the glory days?
Yeah, there is, yeah. I was probably one of the pioneers, I suppose. So I'm 48 now, so we're talking 37 years ago I started.
What got you into it? What triggered that passion?
Well, my father played and my grandparents played, and I mentioned the folks split up, and we'd be up on the weekends to see my dad, and we either had to go along and watch him or go along and play with him.
Join.
So, yeah, but then I kind of left that world and went into the real world, like I was saying, and had a few different sort of roles. Ended up over in Canada for a couple of years, which was pretty exciting. And what's got me into the industry that I'm in today is actually some very poor financial decisions that I made that cost me a lot of money, well into the six figures, and put me behind the eight ball like significantly. And I kind of realised that the only way I was going to be able to, I mean, it's hard enough for people to do well when they're starting from square.
Yeah.
And I thought, shit, I'm actually back here. How the hell am I going to get ahead? So I started reading and listening and going to events and sort of tapped into this whole world of property and investing and wealth creation. And fortunately, I found that space and ended up aligning with a company that offered kind of coaching and mentoring, and I became a client of theirs, and it was mixed results. It got me into the game. I bought a couple of properties through them, and I'm not sure they performed all that well, but it started the whole sort of journey and experience in that world. So, and now I guess I saw the value that it was for me, and now I've ended up on the other side of the desk helping other people sort of get started on their journey and then build portfolios.
Do you think that you learnt probably from those hard lessons of where it went wrong, and even through that experience of getting in maybe an okay outcome but not a great outcome, you're just learning all that way to now put you in the position to provide structured, proper, for lack of a better term, advice?
Definitely. That those mistakes that cost me the money, I still say is the best thing that happened. Yeah. I may very well have just gone down the path that most people go down and never really got into that side of the world, because no one in our family had been, investors or owned multiple properties or anything. And so I don't know that I ever would have even found it had it not been for the mistakes. So I'm very thankful, as a lot of people sort of do say that in hindsight, don't they? And whilst the results weren't, didn't knock the lights out, it certainly expanded my mindset. Both of those properties, which were the first properties I bought, were interstate, and that's often a very big hurdle for people to overcome in the first instance. So it was an experience that paid off, not only from the direct dollars and cents on those properties, but certainly.
A comment on that is people often, if they've had a bad experience investing in anything, that we find they're the most conservative and the ones who pull back the most. Like those scars actually, they carry them forever rather than reflect it and then actually learn and grow from it. Like that's the biggest thing that obviously clearly you took that. You took it on the chin, wouldn't have been pleasant, but then you actually reflected and grew out of that. But a lot of people, we find they had a bad experience with property or shares or any investment 20 years ago. And they just go, no, never again, never ever again. And they just close themselves off to that, or they close off to debt or risk or anything. So that's a big thing, obviously, as a person. Does that sort of probably reflect you as a person?
I think, the answer is yes, absolutely. There must have been a sliding doors moment there that made me even not just go back into the shell and sort of seek more at the time. So I don't recall the specific moment, but I'm very glad it happened. But I think once I was tapping into other people's mindset, psyche, experience, that then created a different way of looking at it. And since then, anytime there's been a challenge, anytime I've had clients that have had challenges, I've been able to just come at it from a different angle. And I particularly love the mindset and the psychology that's required around investing, because exactly what you said, Ben, most people, if they're out there kind of fending on their own, they have a bad result or a bad experience, it's so easy to just retreat. But that's, I guess, one of the superpowers, like Jay said, is our ability to be able to help people through those moments. It's great.
That superpower of detachment.
Yeah.
Take a step back, get your emotions in check, make some informed decisions around what's next. And
absolutely. Like
you've done, Shane, learn and grow from it. Yeah. What do I need to do next? Who are the people in my corner who are going to help me get out of this hole? Definitely.
Yeah. It's a huge thing. And I think the biggest thing is, and something that we're really big on in our business is no ego, like ditching the ego. And that's something that a lot of people find hard to do, and you probably find it with yourselves, that ability to kind of hand over the reins somewhat and say, well, I actually don't know everything. particularly young men. They're not always wanting to admit they don't know everything, but that's our kind of whole philosophy and motto is, you don't know what we don't know, and helping clients around that is really rewarding.
People ask us always like, oh, what are your best, who are your best clients? And they'll think you're going to say, oh, the people who make $2 million a year. And I always say it's the people with the attitude, or the people who know what they do know and what they don't know, because they're the ones who actually listen and they take it on, and they know, right, I'm an expert in this area, you're the expert in that area, and then you work together. And
absolutely.
And they're the ones who get the best outcome. And sometimes they might not start with a lot, but their mindset's correct. So then they can actually grow. And so the people who want to be, and we want our clients to be educated and involved, but also there's got to be a sort of a healthy balance between that as well. Sometimes there's extra bias or personal preference, and that's okay. I suppose it's easy for us to get pushed back on that and make sure that you don't let emotion override good decisions.
Yeah, absolutely. And it's funny you say that, because we're sort of seeing that a bit more at the moment. The last probably say, with property locations that we're looking at, the last sort of 5 years, we've barely had a client. I think maybe 2 or 3 clients invest in Victoria, in the last 5 years. When we live here, we love it here, but the data just hasn't shown us that's the best place to park the money. And it's when someone's presented with an opportunity, and I talk about a suburb they've never heard of, there's really no emotion. But like, we're based here in Geelong, like, let's say, for example, and now Melbourne and Geelong is coming up a lot more in our conversations. And interestingly, you talk about a particular location, and we've got our experiences and our biases and our prejudices because we've lived here all that long, and it's actually a lot harder to present local properties because of those those previous experiences and sort of stigmas almost that we're familiar with.
So we just got to let the data do the talking, and you use the numbers to overcome that. Because us as individuals, and people often have it with shares, and maybe it's a company. I've got some clients who worked for big organisations who collected a lot of shares during those times. They find it so much harder to sell them down, even when they think, because they always think it'll get better. And I know blah blah's now in the key role, and I reckon he'll be really good for the place. But maybe they're a very powerful person, but they're not going to turn the needle on a hundreds of $1 million company. Like it's. That's just emotion.
It brings in so many different those other layers, doesn't it? So, but that's certainly our philosophy: is how do we take the emotion out of it, make a really well-informed decision based on research, on data, on real numbers. In a perfect world, I'd love to be able to present property opportunities to clients for consideration with no images and no address. Let's just look at the numbers and the data around this opportunity, because as soon as they hear a particular suburb or they see a particular, floor plan or property type, it actually changes things. So, but
pretty strong behavioural biases there, aren't there? Like if you can remove those, as you said, maybe the suburb has some stigma attached to it. Remove that. This is the opportunity without any of that emotion. You can make some pretty good decisions.
That's what we try to help people to do. It doesn't. It's not always completely smoothly. We do sometimes have to overcome some of those things, but really that's what we try and boil it down to, is let's look at the numbers, let's look at the data, let's try and take out all those emotional factors. Because it's funny, like, we don't dabble in the share market at all, but I kind of think, with my limited knowledge, that when we're buying shares, there isn't, like, at the end of the day, people just want the best return, right? They're investing money in shares so they can get a great return. And like, whether it's this company or that company, maybe some people have some, what's the right word, like some factors in there. They want to be conscious of green companies or whatever. It's things like that. But ultimately, it's just, I just want to get the best return. I don't care, what it is. But when it comes to property, like, we've got these other factors, and I think because we all live in properties, that
it's tangible. It's interesting though with that. Sometimes we do get it the other way. I had a client the other day, and the advice had been to sell their Commonwealth Bank shares, and I said, look, I wish it did not say Commonwealth Bank beside this share, because if you just looked at the data on this share, its dividend, it's what it's done in the last 12 months, you would sell it in a heartbeat. The problem is it's Commonwealth Bank, and you know what it is, and you might bank there, and you know that it's been good for however long. So the name at the front was creating a bias towards a bad decision.
Yeah.
If you just let the data speak, I said, if that did, you would have sold it in a heartbeat.
You
You probably would
go.
have sold it previously. But that's where sometimes the shares, if you know what they are, similar to a property. Like if it's, I don't know, some obscure company that it might be really important, but it's not like a name that you see in the street or you use regularly yourself. They're easy to sell.
Yeah, okay.
But the one that is, I don't know, Woolworths or Coles or Wesfarmers, and you go, oh, I always go to Bunnings. People actually tie themselves to it, and that's where we do get a little bit of that crossover, where they know what it is.
Right.
Emotional connection, isn't it?
Yeah, they actually go,
Yeah.
oh, but everyone goes there, so
Yeah.
it can't go back. Like it's which is it's funny because we use it as a point of comfort. Like through COVID, where the market crashes, we literally just get their name, their list of their portfolio up, and just go through line by line. And we talk about what each one does, and you'd be like, quickly they go, oh yeah, that'll be fine. Oh, that'll be okay. That's all good. So I mean, they can connect to it and feel comfort. But then on the flip side, they get a bit attached to that as well. Again, different. Some people just go, just do what you need to, and that's easier. I'm sure you probably have the same thing. The ones who give you want them to have input, but not be overpowering with the bias too.
Absolutely. Input, but I guess ultimately let the data and the numbers tell the final story. I definitely want clients to be able to question things and understand what they're doing, and we have a structured process that allows people to confidently buy a property, not just get sold something. And part of that is that back and forth to make sure they understand why we've landed on a particular area or why a particular strategy or property type is most suitable for them. I kind of sort of use the analogy. I say to them, I want you to be able to go to the barbecue the weekend after and tell someone why you bought this property or why you're in this area, not just because Shane told me to. Which some of the clients do that, but no, we try and educate our clients as much as possible to help them make the decision themselves.
With your process, and we've talked around this a little bit, but let's just say somebody comes in off the street, or they've been referred to you. How does that look? Like, say that they just come in and go, oh, Shane, we heard you're really good with property. Like, what would happen? What would be their process for you to work with them to, I don't know, work out is the property correct? How location, style, return focused, all those things. Like, what would be? You could probably spend 2 hours talking about that, but it's sort of the fast-paced version.
The fast-paced version, yeah. Usually what happens is people come to us, they've already got a bit of an idea that they have some capacity, whether they've met directly with a broker, finance broker, and who said, yep, you've got a borrowing capacity up to 800,000, time to go shopping basically, or they're sitting on some equity, they realise they've got something in there that can be done, and they're trying to work out what to do. Usually when we're in front of someone, regardless of the source, they've kind of said, it's property that we're doing. Like, we're not, are we doing shares, are we doing property? Like, they've kind of made that decision. But our philosophy is very much like diagnosis before prescription. There's no best strategy. There's no established property is not better than new property. Renovations aren't better than buy and hold. Like renovation flips not better than buy and hold. But when we go through a process of understanding a person's situation, goals, risk profile, all the moving parts in their world, there will always be a most appropriate strategy for them. And that's really the first instance, is to identify from them almost like a hierarchy of what's most important. Then and only then can we make a confident sort of recommendation. It's like a doctor or a surgeon like that. They can't make that recommendation until they know what they're treating. And when people sort of inevitably meet us, where should I buy or what should I buy? And it's kind of like meeting a doctor and saying, oh, what tablet should I take? I don't know, what are we trying to fix here? And so by doing it that way, we're able to make sure that they understand it, it's most appropriate for them, they can hold the property comfortably. It's quite amazing how, like, the sort of the two main forks in the road that we encounter is most of the time people have got their owner occupier property and now they're ready to invest, and that first fork in the road is established property or new property. In a perfect world, we get to them before the fork before that, which is investment or owner occ. But for 9 probably 95 times out of 100, they've already got their home. And so it's amazing how many people aren't aware of the differences between established and new property in terms of the tax benefits, the stamp duty obligations, just all the different holding costs and I guess benefits. And again, depending on what the big picture looks like, what we're trying to aim for, one of those will be more suited or more appropriate. For us, it's not just a transaction. Let's just buy a property. We want to try and help people keep moving forward. How and what do we use to springboard onto that next one? Because the data shows us that very few people are actually able to build a significant portfolio of properties. In fact, I think it's less than 1 in 1,000 people in Australia, or adults I should say, can get to sort of 5 properties, which is not a lot. Like,
it isn't when there's a lot of content and content creators, and we find it a lot. People come in and they'll go, I want to have 20, and you're like, often they're not even close to 1, but they've read, they've done something, and it's hard because I think the ambition's awesome. It's just about the reality of if it will fit for them, and then they stuff up the first one. That might inhibit them being able to purchase another one for 5 years rather than 12 months, 2 years. And that's where that style of property part. So people invest in property. It's like shares. We could build a really income-focused portfolio. We can build one that's built around growth and slow burn, or different, like a different structure. It's based on their needs, essentially. That's the core of it, isn't it? So people go, oh, what's the best property to buy? Like, people come and ask us that, and we say, well, it's not in our space, and that's where you need to go out and get advice from people like yourself. So you might have a property that's a perfect fit for one of your clients and a horrible fit for the next.
Absolutely. Yeah, most definitely. And probably even the structure of purchasing entities as well. Like, we had a great session with a client yesterday, a new client, who's got pretty decent capacity, but we also spoke about whether they go down the path of buying in their personal name, whether we look to use trusts to kind of extend the capacity and almost quarantine debt to keep going. And there's no right or wrong there. Like, the trust path was going to give them the opportunity to buy definitely one more property now, maybe even 2. But then there's the flip side of it, where the tax benefits are trapped within the trust, which means they're more out of pocket holding the property up. With circa 750,000 non-deductible debt, we had to question whether or not diverting funds to propping up the extra property over here was more beneficial than directing funds into chopping down the PPR debt as a non-deductible debt as efficiently as possible. So, there's more than just banks said you can spend 700, let's pick something. We really try and look at all the layers, and when you spend that time up the front and consider all the options, it all falls into place pretty smoothly after that. But so often when people just make an impulsive decision, or Uncle Fred bought a townhouse in this suburb, so that must be the way to do it. It's not always the right fit.
Times change too, don't they? Like, it's different, that how people went about acquiring property and generating wealth in recent decades has been very, very different to what it is now as well. So you have to be, there's a lot more data. I think there's a lot more informed people, which means probably the opportunity to pick those winners is sometimes squeezed down too. Like, you need good info, you need really good support and professionals around you. There's a lot of people in those spaces, and it probably maybe leads into a little bit around, like, the regulation in your space is that people sort of can just pop up everywhere and start advising, which means, not saying they're getting good advice, but there's a lot more people out there trying to do what you're doing. Is that fair to say?
Absolutely, there is. So we are in an unregulated space, which is certainly leaves the door ajar for some pretty ordinary advice and practice, which is probably why there's no coincidence why so many people have poor results, poor experiences, and don't get the results they're wanting. Like, literally, we can start a property company tomorrow, book out a conference room here, and get on stage and tell people we've got 1,000 properties each, and suck a few in, and off we go, no one to answer to.
It's pretty crazy.
Crazy. It's absolutely bonkers.
Everything
It's
in
crazy
a
to
world
us
of
in this
well,
profession.
I think it's just crazy in this world. Like everything's regulated. You could probably barely open like a fish and chip shop without like, a license. Like
there's more regulation in serving fish and chips than giving property advice. It's unbelievable. So we we really welcome the industry being regulated. Yeah. We would love a Royal Commission because we don't have to change a thing what we're doing. We're part of an organisation called PIPA, which is the Property Investment Professionals of Australia. Basically a body set up to try and raise the standards to provide some consumer protection in an unregulated space. And I guess the only way you can be a member of PIPA is to demonstrate a certain level of qualification, education, certainly demonstrate a process that's got no conflict of interest in there. That's
probably one that's been a bit of in our industry, financial industries, is those conflicts have been everywhere, haven't they?
Yeah, absolutely. So coming back to us starting our property business and just off we go, we make friends with Bob the builder up the road, and it doesn't matter who comes through the door. 19-year-old buying their first property, 60-year-old getting ready for retirement. We just sell the same bloody thing over and over again, and the chances of that being the right fit for them is probably not high. Huge commissions hidden and properties overpriced, and this is what we see. And I mentioned before about how few people are able to build a portfolio, and it's not because property doesn't work, it's the decision making along the way. Either they're going in a little bit blind or getting very poor advice. We certainly very passionate about trying to do it as transparently and as ethically, as compliant as possible, as much as possible in an unregulated space, and that just allows us to sleep well at night as well. Like, my phone rings with a number I don't answer. I answer it because we've got nothing to hide. We've got no one to run from, and so I think most people in the property space wouldn't be answering their phone with the number they didn't know, because there's some pretty ordinary stuff that goes on.
Yeah. So Shane, what advice or tips would you give to an investor that's looking to purchase a property? How do they find the right property advisor given the industry is unregulated?
Well, I think like the PIPA scenario I just mentioned is a big one. That's almost like saying the advisor is as stamped as much as they can be.
Yes.
Assuming that they're looking for an advisor, they've probably dropped the ego by that point. But I think that's a big one for anyone out there looking for property, is saying, look, it's like every industry. When you work with an experienced professional, the chances are you're going to get a bigger, safer, quicker result. I use the analogy of a personal trainer. Like we can all go to the gym if we want to, jump on the treadmill, push some weights around. But those that work with a PT, quicker, bigger, safer results. And it's the same with financial advice. It's the same with property. So ditching the ego, acknowledging we don't know what we don't know, looking for advisors that are aligned with, well, PIPA is probably the perfect example in our industry, and then having their own, I guess, bullshit detector to be able to work out.
There's a little bit of a leap of faith. And
there is a leap of faith.
There's still a leap of faith moment. You can get people referred from their best friends who've been clients for 15 years, but it still is a leap of faith in terms of just people, if they haven't had advice before, it's a big change to their circumstances. And often you're talking about their biggest assets or very close to it, that they're giving you a big insight and level of trust with. So
huge,
I think if you appreciate that, and I definitely get that feeling from you, is if you appreciate the importance of your role in their life, then it's a lot, you're going to do the right thing. And some people forget that they're there for themselves.
Yeah, absolutely.
And it's obviously, it needs to be commercial and everyone has to make money out of doing it, but if you do it for the right reasons,
absolutely,
everyone benefits.
Yeah, that's right. And I've always said, you can make great money doing the wrong thing, you can make great money doing the right thing, and we don't lose sight of the fact that what we do has a huge impact on their life. So again, coming back to our culture and our philosophy within the business is, we remind ourselves of that sort of stuff, which is it's pretty amazing, really. Like, it's very, very fortunate to be able to have that sort of impact over over people's lives. And a perfect example is a couple that come to us probably 4 years ago now, maybe even a bit less, and they had two investment properties that they'd owned for 9 years at that point, and combined they were worth $200,000 less than they'd paid for them 9 years ago. So not only are they $200K down, they've also missed an entire property cycle.
Yeah.
And I still remember sitting with them and saying, well, we can't get you that time back, but we'll absolutely get you that money back. And we then set a plan out to sell those properties, which was done, acquire two new properties. One's been completed and tenanted for maybe 2 years now, and the other one was tenanted sort of mid last year. And they're probably 300 and 100 up, so they're probably 400,000 up on the two purchases they've made with us in the last few years.
Yeah.
When they've gone 9 years and be 200,000 down, so that's bloody crazy when you think about the difference that's made. And not surprisingly, they've referred their son to us, who's now got his second property underway, and he's probably made nearly 300,000 on his first property. So, we actually sort of just pull ourselves back for a minute and go, what impact have we had on this family? Holy shit, we've completely changed their life.
Yeah, and their mindset. And I think that people think you can just buy any property and it will do well like that. Even when property markets have been good, if you buy the wrong property, it's not gonna. It doesn't mean it's just going to do well. It's like any investment. Yep. They don't all do well.
No, definitely not.
There's plenty of people we come across that thought buying a CBD apartment in Melbourne was going to be there, or even on the Gold Coast, that sort of swung a bit. But the Melbourne CBD apartments, they're like 15 years on, and they're worth less than they
paid.
Yeah,
absolutely.
Crazy stuff.
No, it's crazy, and I think everyone's probably been a little bit spoilt the last 4 or 5 years, sort of that post-COVID, where you almost could have bought anything and made some money. It was unbelievable how nearly everything went up. But I think now moving forward probably is going to, what's the right way to put it? The approach we have, where we really need to be quite strategic and really diligent with the research that we're following, is probably going to be even more important now that corrections are starting to, or have already happened and are continuing to happen. So I think it probably adds a bit more weight to what we do, because through most property prices going up and interest rates not dropping for 10 years, working with particularly younger people in their 30s, what do you mean? What do you mean every property doesn't go up? What do you mean interest rates can go down? Can go up. And so I think we're going to have to do a little bit of sort of educating and realigning people's expectations over the next couple of years. But I mean, we're confident in what we do, and we've got the results there to show that our process works. But trying to help people tap into that advice is sometimes the challenging part, isn't it?
I think there's probably been, if you just think about the Geelong market, and again, there's obviously lots of markets within that, but if you just focus only on that, then it's different to if you're looking at a nationwide approach. That's where you can find those pockets.
Absolutely.
Yeah, and that's where most people fear, though, because it's outside of there. Then it actually, the property loses its tangibility. People want to buy something in Belmont because they can drive past it and see it, and they don't care what's happening because it's there. If you buy one in Perth, it's a flight away.
That's right. And I think even if you spoke with people that have done that, they have bought 10 minutes up the road so they could drive past it. They probably do it 2 or 3 times and then don't bother again. But before actually doing it, you think it's a bigger deal. One of my favourite sort of stories from our clients is I had a young couple in the north of Melbourne, up in Mickleham there, who had a great result with their owner-occupied property in Mickleham, came to us ready to buy an investment property and wanted to buy sort of no more than a sort of a few suburbs away. And through a bit of a process and helping them sort of overcome some emotional factors, they ended up buying in Perth.
Okay.
Pretty much the furthest place they could have bought from where they kind of set their original sort of parameters around, and $200,000 gain. Had they bought in those suburbs they were looking at, because that was 3 years ago, they would have actually had negative growth.
Yeah.
You know, so like that's probably, I guess, a reflection of the information we provide for our clients, allowing them to make that decision. It wasn't, you have to buy in Perth. It was, well, let me show you some information that might help you change your perspective. And I still remember going out to his panel beater, and pretty direct sort of language. I won't share it, but I remember walking into his workshop to do the review and sharing that he'd made, you know, just under 200K, and I won't share the expletives, but he looked at me and goes, "You told me, you bloody told me." And I said, "Oh, that's what we do." It was that sort of stuff's like so awesome.
It's when you get that actual feedback. I think that's the difference in terms of what we all do, is that relationship long term. Like when you're just transactional, you don't really. I personally wouldn't find that very uplifting and exciting to get out of bed, because you don't ever see anything. Like maybe it did well, but you never saw them again, and you go, "Oh, they might be happy with me." But like to actually sit there, see what they're doing, how it's impacted their lives, what that means next. That's where you're like, "Hey, that's pretty good."
Oh, it's awesome. So they're just putting their next opportunity on the back burner for the moment, but they've got the opportunity there. They're just focusing on business and a couple of little ones, but we've created that opportunity for them to go again, and they're only mid. Might have been mid-30s now probably. So really solid platform, and they're off and running now. So it's awesome.
And talking about property, Shane, you talked about tenants, so residential. Do you look at commercial opportunities as well?
We don't work within the commercial space, but I think our sort of philosophy is to use residential to then be able to maybe move into commercial down the track a little bit, as we probably moving from a sort of accumulation and growth focus to switching that capital into more income producing assets down the track. So I think a number of our clients have built up a significant residential portfolio now that they will probably look to transfer some of that capital into commercial, but it's not an area we directly focus in or facilitate.
Okay. And I loved what you said before around the process. It's so familiar to us in what we do in providing advice to our clients. But you also talked about sort of the exit strategy. I know you don't necessarily buy a property with the intent to sell it, but obviously educating people around the best structure to purchase property in and so on. Do people often come without an understanding of what actually happens, at the time of exit?
Yeah, absolutely. Very few people have even thought about the exit side of things. It's usually only when we start talking about maybe looking at interest-only loans where they'll go, "Hang on, don't I have to pay this off at some point?" sort of, and that opens the conversation around the exit strategy. But for us, the exit strategy is definitely what needs to be on the table early days. Life events that might trigger sale of assets can maybe influence the purchasing entity one way or the other as well. So part of that diagnosis is to really try and find out what are the influencing factors that will maybe provide a different recommendation around the exit side of things. One strategy that we've employed for a number of clients over the last few years has been like a dual income type property with a floor plan that allows pretty simple modification to knock through a wall and essentially turn what is currently a 3-bedroom one side and a 2-bedroom the other as a dual income property, convert that to a 5-bedroom home that can then be sold into the owner-occupier market, which is ideally the market you want to be selling into at the other end. So they're sorts of things that we can sort of talk about the exit being a lot cleaner, because again, most people aren't really thinking that way.
No, it's just another layer to it.
Yeah.
That most people were not thinking about. Well, they become biased to an expected outcome and not having, they think, we'll always be able to divide these up and sell them individually, instead of thinking, we can actually sell them as a collective. Often people think about the subdivision, the battle axe block or something like that. But the reality is that not many people do it well.
No, there's not a lot of people that do it well, particularly, it's amazing how many people think they want to be a developer. Like, never bought a property before, but I want to be a property developer. You know, the block's done wonderful things for people's psyche, thinking it's pretty easy.
Yeah, it's good for real estate agents. So corner block development opportunities. Like it's always listed there, isn't it? And the reality is that it's not that easy.
No, definitely not. And I've met with quite a lot of people that have gone down the path of doing subdivisions and developments, and they haven't made any more money than, like I've mentioned it just since we've been chatting, multiple clients well and truly into the six-figure gains from being extremely passive, buying something and sitting on it, buying something in the right area at the right time for the right value, and you can make probably more money than without any of the stress.
The stress, the risk, the blowouts,
the energy.
It's the energy, the focus, the time, the pressure on personal life, relationships, and so we work with a number of builders that use us to help build their portfolio, because otherwise they're having to either take time out of their business or do it outside of work, and then kids, wife, whatever it is, that comes at a pretty significant cost. So it's good fun.
Jim, I've been waiting for you to ask this question about the rent triangle. You want to?
Oh, sure.
I've just been intrigued by this. What was? I don't know what it is.
Triangle?
Did you?
You mentioned the term rent triangle in the podcast with Jay, unless I misunderstood.
Did I?
Yeah.
You made a term up. Maybe you made it up. Maybe you just didn't hear it right. You're listening to it on 2 times speed and just.
Rent triangle.
I was trying to work out what it is. Maybe it's a strategy you've just.
I'm going to have to go back and.
You're going to have to find out. We'll take that on notice.
Yeah, that's right.
And then I'll come back to you.
We'll have to come back to that one, because I don't know what the rent triangle is. Sorry.
Here's one you'll answer easily, and we've talked about it a little bit. The investor mindset.
Yes.
Yeah. Yes. So how do you articulate the investor mindset? What are you looking for in people that approach you and want your advice?
Yeah, I think. The biggest thing is, I think, being able to remove the emotion out of it and make it really almost like a business decision. Certainly. Not being able to make decisions that aren't driven by short-term sort of factors or focus. Okay. Let's just use the media, for example. Like every day we can find something online that would convince us to pull all the money out of the bank and never invest in anything, and that can sort of mess with people's heads. So that ability to see it, but park it and try and look at it a bit more objectively. Lean on I guess the trusted professional to help guide those decisions a bit more. I think you used the term before, like not impartially, but what was the term where we objectively? That's right. Emotion. So that's a big thing to have that as a mindset. I think to be able to do really well in investing, because there's not all sunshine and rainbows. There's twists and turns and struggles, but to be able to overcome that and sort of stay the course or make a decision that the majority of people might not make, I think is really, really important.
Yeah, it's probably no different to investment markets, is it? I know this was a conversation that you had with Jay around, buying when the market's, low and selling when the market's high, like having the clarity of your long-term strategic plan and not reacting to things that are happening around you.
Absolutely.
Yeah, very relevant at the moment with the world events that are
sometimes the hardest thing is to do nothing. Like often, like I say, people pay us a lot of money to tell them to do nothing, and that's actually, they were going to do something, and we said, no, don't do anything.
Don't do anything.
And that's actually the most valuable thing. You just got to hold your nerve sometimes. You just don't panic. Sometimes it's just the best option is do nothing. And, it's like maybe you've had someone who's purchased a property, maybe for whatever reason on paper it's gone down in value in the first 12 months. They think, have we made the wrong decision? You go, it's all good. Just like, you just got to play it out and let all the data that's driven the decision drive the holding pattern, and it will be okay.
Well, probably the biggest thing there, I mean, we've never, hand on heart, we've never had a property that's gone down in value, but as in the ones we've recommended for our clients, but I bought a couple of lemons early myself that have done that, but where that's probably quite applicable is when we get the bank valuation done and it comes in low.
Yeah.
That's almost, that there is a real fork in the road for people. Like, do we trust that we've done all the research, we've assessed the value proposition, we're comfortable that property is 700,000, that is the right price, but a bank's come along and said, yeah, we'll give you the finance, we're valuing it at 600. Well, people start thinking, shit, we're paying 100,000 more than we should be. It's not the case. The valuers, they're very conservative by nature. They're not paid to predict the future. And if we're going early into markets, like let's use Melbourne as an example, it's been easily the worst performed capital city for the last 4 or 5 years. We've now got that in all of our conversations, whether clients end up in there or not, but we absolutely see Melbourne as being, and by extension Geelong, as being probably the best place for growth moving forward in the next, say, 5 years. The challenge with valuations is that we're going into a depressed market where valuers have got very small volume of sales and low-priced properties, and inevitably we see a lot of fluctuations with valuations. So sometimes clients just don't have the ability to go forward in the event of a low val, but it's interesting when someone does have, say, equity to fall back on. That's a real test for their psyche, that low val situation. Yeah. And we've had it in the past where 2 clients in the same project. So I distinctly remember a townhouse project up in Queensland. Both of them got low valuations by like $100,000. One decided to pull out. One decided to stay in. Within 24 months, they were $200,000 above contract fee, so $300,000 more than what the valuation was. So, unfortunately, this person bought in more to what we would say the wrong side of the table in terms of the information they were acting on. But that's probably the closest thing to what you're saying there, and we've got to try and help people see around that.
Yeah, and just give them comfort. It's their emotion overrode them, and they made a short-term reactive decision and pulled out. Yep. And maybe they feel better about that for 6 months, but 6 years later they're the ones who go, oh, shoulda, coulda, woulda. A lot of people live in that space. Yeah,
and we've seen that multiple times, unfortunately. So it's probably the most frustrating part of our job is when we do all the work. We know this thing stacks up, it's in a great area, its price is right, it suits the client, and then someone's opinion on the day, who for some reason the general public think banks and valuers are they're gods as far as dictating what property price is. Like, it's ridiculous. It could be as fickle as the person didn't have their coffee that morning, was in a shit mood.
Yeah, let's say you're relying on an individual with emotion.
Or they're in a rush, I'm having a bad day, I've got to get off to the kids' sports, and they cop a 50k light bell, and that could be enough to stop someone from making 6-figure gains, So it's very frustrating for our side, but it's just part of the game we play, and certainly part of the education piece for our clients. Yep. Doesn't always mean when we get to it, it's smooth sailing, but we do our best to navigate that with them and for them, I suppose.
We could probably talk about property all day, but we'll talk about your passion project on the side. So give us a bit of an insight, I suppose, into what that is, why maybe, and just sort of a bit of information for everyone around that.
Yeah, I'm really passionate about mental health. It's it stemmed from my own personal challenges. Probably the last decade or so have been, pretty challenging with my own mental health, and having gone through those struggles and tapped into resources, I guess I've learnt a lot about that space. I've seen the benefits that it's provided myself, and knowing all of that and having experienced all that, I kind of almost feel like compelled to go in and try and help, where I can with other people. So that's probably the mental health passion has probably been the primary driver of doing the podcast. I remember when the idea of a podcast was raised, and it was going to be around property and wealth creation. I thought, nah. But then the idea of being able to layer in mental health and potentially bring in guests that weren't just talking about property, and that excited me. And I was like, well, okay, I can actually mesh the two together here. So, yeah, it's an unbelievably horrible statistic that we're dealing with at the moment. I mean, it's, nine Australians a day dying by suicide is just
staggering.
It's staggering. It's unbelievable. And to think, I've been in and around it for 10 years now. I feel like there's been so much work done, so many conversations had, so much effort into breaking down the stigma. But it seems like we haven't even scratched the surface.
I feel like we're fighting against the tide at times. It's almost, even with all the efforts that go into it, nearly everyone knows someone, unfortunately, who maybe has taken their life or by extension.
Absolutely. Well, we did sort of partnered up with Lifeline to do a bit of stuff, and one of the events that Lifeline are running, and did the second one a couple of months ago, was a bit of a fun event where entrants, which were local business owners, and would run down the straight at Geelong Racecourse. Now, it was a way to raise money, raise awareness, but you mentioned about people, everyone knows someone. It was over 135 metres, and the reason it was 135 is because for every suicide, there's 135 people that are affected.
Wow.
Friends, colleagues, teammates, whatever it is. So, yeah, nearly everyone does know someone that's been affected, and I feel like, as I said, so much work's been done, but I feel compelled to try and do everything I can to move the needle on that, educate people, create awareness, normalise the conversation, which is going to be using the platform, the podcast platform on my socials to do that, because still even now there's a people don't speak up. There's a stigma attached. Like, everyone's happy to get into the office and say, "Oh, my back's sore," or "hurt my ankle," or whatever it is, but we're happy to talk about the physical health, but we need to get to the point where we can talk about mental health exactly the same way. So doing what we can. I've set a personal challenge, which is around being able to donate $50,000 to mental health foundations by the time I turn 50. So I've got under 2 years left to do that. And that's, I guess, a way to, there's going to be benefit from the funds being donated, no question. But I think the biggest thing is probably going to be my ability to talk about that for the next couple of years. And hopefully start to normalise that conversation a bit more through my business community, my friends and family. And it's pretty exciting. It's not quite as exciting for my wife when I told her I was going to donate 50 grand. What do you mean? 2 young kids, IVF, daycare. But I guess what I've seen from doing that is it's kind of lit a fire under me professionally, which I suppose as an indirect result is actually creating momentum and benefits in the business, which is great, because we feel like we there's more purpose in what we're doing. When I sit with someone and I'm able to help them change their life by creating wealth, in turn that's allowing me to then give back to the mental health side of things. And
so it's a bit about you from a personal point of view, is that you think about why you end up in this job is because you had a bad outcome, so then you wanted to help people have a better outcome, and in a way you've had some challenges yourself, but instead of you go, oh, I don't want anyone else to, or other people not to suffer the same way. There's actually a parallel of that.
There is. It's exactly the same.
It says something about you probably as a person,
right?
And that how you some people run away from those challenges, or they sort of never touch it again. Where you're probably one that goes, assess it and then double down and try and make it positive out of it.
Yeah, I've got goosebumps when you say that. I never looked at it that way.
I just thought of it. It was exactly the same as how we started, and how you sort of got to what you're doing now is very similar to that.
Yeah, it is. That's.
But you can use that yourself when you podcast, right?
Oh yeah, no, that's good. Yeah, you're right. It's exactly what's happened. So from bad experience,
challenges, you flipped them on their head.
Find some positive and help other people. So that's sort of from a personal level, and I want that to be like a genuine donation out of my pocket. I'm not doing fundraisers and selling raffle tickets and all that. I mean, that's great, and I'm hoping organically, as I'm sharing this over the next 12 to 24 months, that potentially there's some businesses or whatever that sort of, chime in, but primarily it's around me being able to share that story. As a company, so Logic Partners is absolutely on board with that, but as a business, we also have some pretty big goals around giving as well. So we've partnered with the Special Kids, Very Special Kids Foundation, which is a group that essentially looks after children that are in palliative care, which is pretty awful. And so what we want to be able to do is either buy or build homes that families can use to stay close by where their children are being sort of treated, and also with Peter Mac Foundation. So we've got a little bit to go on this one, but our big picture goal is to get to the point where we can donate $1 million a year to Peter Mac to help fight and cure cancer. So
Amazing.
That is really what we do that because we want to help, but it really does mean there's real purpose in what we're doing as well, and we share that with our clients because we want them to, we have our sort of motto is, live life on your own terms, and so we want people to find that purpose and that passion, which is what we're doing. It's very fulfilling.
You got to set goals, ambitious ones. Like, you got to have something, and it might sound a bit crazy initially, but you have to have something there to push towards. And if you make it public like you have, then it keeps you accountable.
Well, there's the accountability. That's right. Absolutely. I remember I did a fitness challenge 10 years ago, whatever it was, where I had to basically take a photo of me and my jocks holding the newspaper to prove the date and say, in 12 weeks' time, I'm going to be, lose this amount of weight or whatever it was. And I had to do it because I was shit. I've put a photo of me and my jocks. I can't look the same in 12 weeks' time. And so that accountability, I think, is huge for people, and that's what we do as advisors, isn't it? We're providing accountability. So it's awesome.
I suppose, do you have any other questions?
No, I was just going to say, Ben, that we've got so many great organisations in the Geelong region, whether they're charities or other sort of organisations that are supporting, especially in the mental health space. So we do a little bit of work with a number of different charities. The one that I was sort of thinking that came to mind, Shane, that might be a good sort of synergy is a group called Read the Play. Have you heard of Read the Play in the Geelong region? I haven't, no. Yeah, so they're youth mental health.
Okay.
And they go into sporting clubs and provide sort of wellbeing officers and training for the kids. And you're talking before about entering the workplace, hey, you're going, the back's no good, but you don't talk about your mental health. Well, respectfully, the younger generation actually do. They're actually much better at supporting each other because those conversations are not out of the ordinary for them. But for us, I'm going to include you in our generation here, Ben. We haven't grown up with those conversations, so we're not quite as comfortable. Yeah. So, I think our youth are struggling in lots of respects, with especially post-COVID. But there's also a lot going on that space that is going to support them.
Yeah, awesome. And there's I haven't heard of Read the Play specifically, but it's great to hear that there's a focus out there. And it needs to start at the
early intervention
at the young age, doesn't it? So, my brother-in-law's just started work with a company that's doing that same thing, going into schools, looking to educate both teachers and students. So, the more kids we can get in front of, and that's gonna certainly help. But I guess our generation's parents were not. It's not their fault, but they kind of taught us that you don't cry, you don't show people you're sad, or that you're a bit weak if you sort of cry or speak up or whatever or complain. So educating teachers, students, and young parents, I think, is going to be a huge part in being able to change that approach. And unfortunately, I think it'll take generations to get to the point where we do want to get to, but got to start. We can only control what we control, can't we? So, that's awesome. But I'll keep an eye out for Read the Play. That sounds good.
I might get them on your podcast, which, again, remind us again, Mind Over Market, correct?
Mind Over Market, yeah. So, again, having that mental health element in with the finance, wealth, property side of things. So hence the mind part over the market. So yeah, that's where that little sort of name come from. And looking at it, I guess even just purely from an investment perspective, that having the mindset and the psychology around the decision making is that's how I landed with mind over market. But we're up to a whopping 6 episodes now, I think. So don't think we've set any records on Spotify as yet.
It's coming.
Maybe for the least views, least listens.
I think we're at 117 or something, and we're still, we're just building still. We're still building, so there's
117 episodes.
I think so.
Yeah,
Joe will correct
awesome.
me if I'm wrong, but I think ballpark around that sort of point. So
Fantastic.
a bit
Yeah,
higher, more.
Yeah.
So
right.
we'll keep turning up. We'll keep talking. People might be listening, might not be. I think the other thing with what we do and what I find is that people who have got their finances in order and they've got structure and stability around that, like they're actually in a much better place, like mentally as well. It's just one factor, but we definitely find, and unfortunately we see on the other side where people haven't had it in order, and then they come to us and they're going through relationship breakdowns and all sorts of things, and they're making quick sort of emotional decisions, whereas if you're proactive and you set your finances and have comfort, it really does help their mental health.
Oh, absolutely. It's just a snowball effect both ways, isn't it?
Yeah.
Everything's just a roll-on effect. And the couple we met with yesterday, they said that, like, for the first time they feel like they're in control of their money, which, what that would do to a household would be massive.
It's the thing, and we probably take for granted how many people don't feel like that. Like how many people feel like they're working weekly to just survive.
Oh yeah,
to not even get ahead. Like we probably deal with people who maybe are outside of that or on the cusp of that or moving forward beyond it. But there's so many people who are just hanging in there, and sometimes they don't need to be. They just haven't got any help. Like they just haven't got any structure, advice, process, or they just don't know what they don't know.
Yeah.
So I think all these sort of streams of content are good. Try and get more people involved to just learn something, get themselves set up, and it might take them time to get into that investment property, but they've got to start. So,
but at least they feel like they're in control and making progress.
Definitely.
It's certainly the minority that feel that way, isn't it? Unfortunately.
Yeah. We'll obviously share out your podcast link, all your social media links and everything in the show notes. So if anyone's looking to find Shane, please jump on there. No doubt there'll be plenty more podcasts to come on his stream for you to listen to. Thank you for coming in. I really appreciate you coming over. It was good to learn a bit more about you and the business and everything. No doubt, like as Jay always says, we'll get you back for another episode to find out how things are going and talk more about markets and maybe a couple of even case studies and stuff. People love the idea of property and investing. So thank you for coming in, and hopefully we can do it again.
Thank you. Yeah, pleasure being on here. Glad I can come.
Thanks, Shane.